Today is the 31st of December and the markets are only open for another few hours before we move into 2022. So I thought we'd have a look at a year-long roundup of my Vanguard portfolio and look at my projections for the next 12 months. In my last portfolio update back in November, about 6 weeks ago, my portfolio was valued at £10,418, whereas now you can see it's valued at £10,811.25. And this is because of some of my monthly investments and also a little bit of capital gains throughout that time. I am of course still expecting to see dividend income, which should have been paid on the 29th of December, but as we know that's quite often paid a few days late by Vanguard, but it will come in and I'll of course update you on that as soon as I can. My time weighted return sits at 50.36%, and my current largest holding is still the S&P 500 with a total amount invested of £4,046 and 40 pence, which makes up around 37.5% of my overall portfolio. With the new ISA allowance being released in about 4 months' time, you can see that I've currently invested almost £3,000 during this financial year, which means that I'm on track to reach my £300 to £400 a month target, which I set earlier in the year. If we click on the investments tab down the side, you can see a much more detailed breakdown of my current holdings within my portfolio. You can see that I still hold on to the life strategy, even though I have mentioned selling this on a number of occasions. I will be doing that very shortly, but I do still hold quite a substantial amount of the Life Strategy 100, which equates to around 18% of my current portfolio. The other 6 funds that I hold are all ETFs and are all part of my 6-fund portfolio that I've done a video on. I'll link up above. We're not quite there with the weightings that I did mention in that video. You can see this S&P 500 should be up to 50%. The FTSE 100 is currently overexposed, but I'm aiming about 12%. But you can see we're starting to get towards the overall allocation that I am looking for. And when I've sold out of this life strategy, I will ensure that my whole portfolio meets the allocation which I want to achieve. To break it down even further, you can see the total amount of units that I hold within each of the funds. So you can see the emerging market, I currently hold 27, the FTSE 100 45, and the S&P 500 down here, I currently hold 60 units of the fund. While that might not seem like a lot, and in the grand scheme of things, it's not anywhere near where I want it to be in 10 or 15 years time, this does mean that some of the swings that I'm seeing in my portfolio are getting quite large now. And on a day where the S&P 500 swings by 50 pence per unit, this is seeing me a £30 movement in my portfolio. So you can see once I get more and more, perhaps up to 600 in the future, this £30 swing will equate to a £300 swing in the future. So I am seeing my portfolio fluctuate a lot more, and that's just because my portfolio is larger, so smaller percentage differences make larger impacts on my overall value of my portfolio. Clicking into the performance tab, you can see that since inception I've invested £8,895, and this has returned to me £1,916.25, which of course gives me this overall £10,811.25 value of my portfolio. We can also see that depicted on the graph down here, showing the growth of my portfolio throughout time since inception. But because this is the final update of 2021, it's going to be worth looking at the year to date as well. So if we click up here, you can select the date ranges yourself, but Vanguard make it even easier for you, and you can just click on this 1 year tab, and that shows you the year to date, as you can see here, the 31st of December 2020 to the 31st of December 2021. From that, you can see that this time last year my portfolio was valued at £5,434.12, so it is up around 100% since that time. Now, most of this £4,110 comes from investments. However, over £1,250 of that is from capital growth and dividend income, which is really pleasing to see. This means that my time weighted return throughout the last year is 16.83%, which is far and away above the usual 7% rate of return that you'd expect to see from investing within the stock market. The calculations tab again breaks this down even further, so you can see some of the main numbers from my portfolio. The most important one here for me is the total dividend income that I've seen in this account, which is now £170 and 41 pence. Now that is since inception, but if we click on the year, so year to date, I've taken in a whopping £124 and 87 pence in dividend income. This equates to a little over £10 a month, and this is for nothing more than holding my money in these Vanguard investments. This truly is passive income. If we hop in and have a look at the monthly data, you can see that in December 2021, so far I've invested £300, and that is fairly consistent, anywhere from £250 to all the way up to £600 in this calendar year, with £620 being my largest month to date. In December so far then, my investments have returned to me £234 and 45 pence, but you'll notice that dividend income which I'm expecting hasn't yet been paid, and of course I don't pay fees in December. The next time I can expect to pay fees will probably be February on its quarterly fee taking. Throughout the last 12 months I've had 8 positive months and 4 negative months, with my worst month netting me a loss of £178 and 17 pence, and my best month in 2021 being August, which saw me gain £276 and 59 pence within that period. This is still over £100 off of my best month to date, which was November 2020, which saw me at £385 and 92 pence in capital growth. The investments tab again breaks this down into fund specific detail. So we'll leave cash out of it at the top, but you can see the FTSE emerging markets, I've got an unrealised gain of £62 and 97 pence, a total income of £24 and 31 pence, and that's dividend income, and a total gross return of 13.53%, with a total profit loss of £87 and 28 pence. We've then got the FTSE Developed Asia Pacific ex Japan, which is seeing an unrealised rate of return of £82 and 35 pence, with £17 and 76 pence in dividend income, equaling a total return of £100 and 11 pence, or 29.85% in time-weighted gross returns. The FTSE Developed Europe ex UK, I've currently seen an unrealised rate of return of £35 and 50 pence, adding to a £7 and 20 pence dividend income, equating to £42 and 70 pence overall in gain, which equates to around 9% in capital growth in total. The FTSE Japan, which hasn't been performing particularly well of late, I've currently up 94 pence, amazing, with an income of £5 and 8 pence, which totals £6 and 2 pence in gain or loss throughout the time I've held this fund. Overall then, just a little under 1.5%. The FTSE 100, I've currently got an unrealised loss of £157 and 30 pence, with a total dividend income of £73 and 2 pence, equaling a total of £227 and 8 pence, or 31.58% in gross return. The largest investment in my portfolio then is of course the S&P 500. I've currently got an unrealised loss of £911 and 50 pence, so almost £1,000 in unrealised loss within the S&P 500. I've also received £42 and 87 pence in dividend income, so I'm up a total of £959 and 60 pence on this investment alone. So I know what you're thinking, why don't I just invest in the S&P 500? And I have thought about it a few times. However, I believe in a well-diversified portfolio, and I think that throughout the long term, throughout all of the market moves, it's really important to be fully diversified, just in case something happens in America that sees this pull back substantially and other areas perform better than them. We'll breeze over the Developed Europe ETF because that was of course one that I bought and sold by accident. And then finally we've got the Life Strategy 100, which, as I say, I will be selling at some point. Keep saying it, it will happen. I've currently got an unrealised gain of £497 and 48 pence, and a current realised gain of just over £12.50. So that's a total gain or loss of £510 and 23 pence, or just under 50% gross return. So that is my portfolio then, sat at £10,811 and 25 pence. However, because it is the end of the calendar year, I thought it would be worth looking ahead at where I can expect realistically this portfolio to be in 1 year's time. Now, this of course brings me to every investor's favourite tool, the compound interest calculator. So what I've done then is I've put £10,811 and 25 pence into these compound interest calculators as my initial capital, and I've set both a 5% and a 7% yearly rate of return, just to account for the high and kind of the low ends of the potential. We could of course see a massive market crash in 2022. If it does happen, I'm going to make sure I pile lots of money in at that point. There's lots of scaremongering around at the moment, and we may not see as productive year this coming year. I've set this for a 12-month period so we can see the growth throughout those 12 months. And to start off with, I'm going to use a monthly deposit amount of £300, and this is what I can very comfortably manage to invest every single month. First of all then, we'll look at the 5% rate of return on the £300 monthly investment. So you can see that my portfolio is obviously currently valued at £10,811, and in a year's time, with £300 monthly investment and a 5% rate of return, my future investment value will be £15,034.31. If we then hop across to look at how that looks from a 7% rate of return, if we can continue to see that 7% rate of return as the S&P 500 and the general market sees throughout a longer period of time, you can see that instead of that, my portfolio will be valued at an additional £250-ish at £15,283.54. If we hop back into the 5% projected yearly rate of return and we change the monthly deposit amounts from £300 to £400, which is something that I'm going to be trying to achieve within this year, you can see that my overall calculated future investment amount moves from £15,034 up to £16,261, which is an excellent place to be in a year's time. Now, of course, if we hop back across to the 7% yearly interest rate or rate of return that we can expect to see, and again, we change that £300 monthly deposit to £400, this £15,283 will increase all the way up to £16,522.04. From these calculations, and assuming a 5 to 7% rate of return throughout the next 12 months, it's clear that in a year's time, my portfolio could realistically be £15,000 up to around £16,500. So that's the kind of target range that I'm looking for. Now, of course, I can't impact what happens in the markets over the next 12 months. So my own personal target is to invest at least £4,800 within the next 12 months. Actually, let's round that up. Let's round it up to £5,000 within the next 12 months, or around £416 per calendar month. This will see me use almost a quarter of my ISA allowance, and of course, ISA allowances run slightly differently from April to April, but £5,000 is of course a quarter of the £20,000 ISA allowance. So that is my target for the next 12 months, £5,000, and hopefully, all being well with the markets, that will see between 15 and 16.5 to £7,000 in total portfolio value. And there we go. I really hope you've enjoyed this portfolio update. Again, from looking through my YouTube analytics, it's clear that people enjoy watching these videos, as they are the videos that get the most views consistently, the most comments and the most likes as well. So if you do enjoy the videos like this, please don't forget to comment on the video, like the video as well, and consider subscribing if you haven't done so already. By the time this video is out there, it will be the new year, so I hope you've all had a very, very good new year, and I wish you every success in the year ahead of investing. And with that said, I'll catch you guys in the next one.